Welcome to my channel, Accounting with Gawhar Baig. Last video, we were discussing about the definition and explanation, the reasons for depreciation. Today, we will name and describe all of this part of this content of the syllabus, which is basically the name and the description of the straight line, reducing, and revaluation method of depreciation. The first method of depreciation. Number one, straight line or equal installment method. The explanation for that is equal percentage or proportion on the cost less residual value is charged as depreciation annual. The formula being percentage on the cost minus residual value, or there's another formula, cost minus residual scrap or salvage value divided by the useful life of the asset. You need to remember the formula for your examination. The suitability of the formula. The method is most suitable for assets which are likely to have a very long life or which spends the whole of its expected life within the business. For example, fixtures, fittings, building, furniture. Make sure you understand the suitability of the assets. Basically, these are for assets which have very long life, means which actually spends most of its time in the business and it is not replaced until unless they are fully depreciated. So let's go to the advantages of depreciation of straight line method. Advantages. Straight line is simple to operate and calculate. Number two, gives equal depreciation for equal benefit received each year. And the residual value can be included in the calculation. In this case, no other depreciation method allows the residual value to come into the calculation. Let's go for the limitations or disadvantages of straight line method, which being the first one, assets will lose more value in earlier years of ownership than later years, which is a very practical thing. Number two, statement of financial position value may not be in line with the market value, which is true, that the net book value may not be equal to or close to the market value. And number three, the net book value of the asset may become zero, as sometimes we don't have residual values of assets. So those are the advantages and disadvantages of straight line method. Let's go to the second method of depreciation, which is reducing balance or diminishing balance method. As you can see here, number two, reducing or diminishing balance method. The explanation for that is equal percentage or proportion on the net book value is charged as depreciation annual. What is the formula to calculate that? Depreciation, percentage on the cost minus accumulated depreciation. Make sure you understand or have the idea that it's not just accumulated depreciation, it can be called provision for depreciation. Provision for depreciation. Or sometimes it may be called aggregated depreciation. Aggregated depreciation. Or you can directly say that percentage on the net book value is the same as this formula, cost minus accumulated depreciation. Suitability. The method is most suitable for assets which are subject to rapid technological changes or which loses greater value in earlier years of purchases. For example, computers, machinery, vehicles, etc. Now let's go to the advantages. Advantages of reducing balance method. First advantage is greater depreciation will be charged in earlier years, which reflect the situation with the assets, which in this case, reducing balance method does. It allows the total asset cost to balance out. Like initially, we have higher depreciation. In later years, we have lower depreciation. Third one is provide a more realistic book value, which means it is more closer to the market value of the assets. Now let's go to the disadvantages. One of the disadvantages, number one, distorts profit calculation if method of depreciation is changed, which is a very normal thing. Whenever you change a method of depreciation, the profit calculation will be distorted. Second disadvantage, not appropriate if assets are used equally from year to year. As in, like in straight line methods, you are not allowed to use reducing balance method for assets which are depreciated using reducing balance method. Let's go to the third method of depreciation, which is revaluation method. The explanation for that is the difference between the opening and closing net book value, including any additions and excluding any disposal, is charged as depreciation annual. Formula being depreciation for the year or charge for the year is equals to the value at the beginning of the year plus any additions, which means any kind of purchases, minus disposals, which means any kind of sell of non-current asset, and minus the value at the end of the year. Now let's go to the suitability of this method. The method is most suitable for assets which are low cost and tend to be numerous in number in any organization. For example, loose tools, spare parts, small equipment, etc. Let's go to the advantages. Advantage of using revaluation method. Number one, simple to operate. Number two, book value is closer to market value, very realistic. And number three, assets are valued in groups, not individually. Let's go to the disadvantages. The disadvantages being, number one, all assets in a group may not be depreciated the same way because all assets in a group may not be used in the same way. Number two, not appropriate if assets are used equally from year to year, which is applicable for straight line method. So revaluation method will be applicable for assets which are small and are numerous in number.